So if you're familiar with crowdfunding, you probably have heard some of the stories. And if you go to the next slide. This is the famous Kickstarter story about Pebble watches. They actually were looking for $100,000, and they put their watches up on Kickstarter, and these watches interact with like your iPhone, so you can actually do a lot of things. It's almost like the Dick Tracy watch come to life. And they were able to sell over $10 million worth of these watches on Kickstarter. So they were looking for $100,000. They got $10 million. So this is really a success story for Kickstarter. Okay. Marquise, you just made me the presenter, which I can't do. So you need to take me off of that.
Okay. I'm sorry, guys. Here you go. Hit a button. Now can you see the screen again?
Yeah.
There we go. Okay. I'm trying to just make sure you get control.
Sorry about that, folks. The wonders of technology. But anyway, here's another one. This company was looking for $400,000 to develop a video game, and they actually raised $3.3 million. So these are some good, successful funding stories. But if you actually look, Kickstarter and Indiegogo are littered with hundreds of companies that actually didn't get any funding or didn't meet their goal. And if you don't meet the goal, you don't get the money. Now, the difference between, say, a Kickstarter and the kind of crowdfunding that they're talking about authorizing and that they passed the law for is that Kickstarter actually had to pre-sell a product or get donations from people for a project as opposed to selling equity through the internet. The Crowdfunding Jobs Act is actually going to allow entrepreneurs to raise money for their company by selling equity or debt over approved internet portals, and I'll go into that in a minute. Can we go to the next slide, Marquise?
Yes.
So here's an example of somebody that was trying to raise $6,000 and they only got $700 and they didn't make it. If you go to the next slide, this is a company that is actually doing crowdfunding today. The name of the company is Micro Ventures, and this is an actual broker-dealer. They're located down in Texas, and they have accredited investors on their website that are looking for new ideas. So if you're an entrepreneur and you want to post your project up on their site, they're going to charge you money because they, as a broker-dealer, they have to actually do due diligence on your company and make sure that you're not a scam and that you know, they have to approve your account because they're taking on some risk. So they charge you for that. It's not a lot of money, but if you get approved, your total all-in deposit is $500, plus they'll take a percentage of whatever you raise. So this is actually a crowd-up funding platform that is up today, but it's only for accredited investors. Now, if you go to the next slide, you can see that there are some funding opportunities that aren't necessarily crowdfunding yet, but there are competition pitches where you can go out and pitch your idea, and if you win the competition, you can actually win some money. So this is another form of crowdfunding that we have before the actual crowdfunding starts. Now, the Jobs Act was passed earlier this year and signed by President Obama, and it allows a number of different things. What we're covering today is crowdfunding, but they also made changes to the Regulation A offering, the Regulation D offering, which are both private offering exemptions. The bill was signed, the President signed it, but the SEC is still developing the rules. So if you've been following this at all, The SEC finally ruled on the very first issue, which was general solicitation, and they ruled on it this week. They were supposed to have ruled on it in July, so obviously they're running a little slow, and they opened it up for a 30-day public comment period, so they're not going to issue a final rule on general solicitation until at least a month from now. So with the crowdfunding, you can raise up to $1 million a year. You're allowed to advertise your offering over the internet. You can use social media to promote it. And there is one thing about it. You can't just post your project up on the internet on a web page and say, we're looking for investors, come invest in my money, and take investors' money. If you do that, you're running afoul of the law. What you have to do is you have to post it on an approved portal. And as I said, you know, the SEC rules are still being promulgated, so you're not allowed to actually, portals are not yet open, and I think seriously that we won't see this until probably early next year, where you can actually raise money through crowdfunding. So, next slide. What crowdfunding does is it gives you an exemption from state registration. However, you are not exempt from all the anti-fraud provisions. So you got to be careful. You got to do it right. You can't go up there and throw a project up, raise a bunch of money, take your project down, throw another project up, raise a lot of money. That's against the law. It's called fraud. One of the great things about crowdfunding is that your original holders are not counted against reporting and restrictions. So the SEC has some very tight guidelines. It used to be that you could only have a couple hundred investors in your company before you had to start reporting on a quarterly basis to the SEC. So you become a reporting company. Now they've raised that exemption up to 1,000 shareholders, but crowdfunding does not count against that 1,000 shareholder exemption. So you're actually in good shape with crowdfunding as far as reporting to the SEC goes. However, I'll get into in a minute why having a bunch of shareholders that contributed $10 towards your project and got a couple shares of equity may not be such a great idea. So with the crowdfunding model, you have to use an intermediary. So the intermediary needs to be a portal. It could be a broker-dealer. It doesn't necessarily have to be, but it does have to be registered with the SEC. And what that means is that you are going to be regulated if you're a portal offering crowdfunding projects over the internet to investors. Now, right now, the SEC is supposed to have a self-regulatory organization oversee that offering. So as a SEC registered portal, you are most likely going to be coming under the jurisdiction of FINRA, which is the Financial Industry National Regulatory Authority, and they're the ones who govern all the broker-dealers. Now, I'm a FINRA registered representative. I'm an investment banker, and I can tell you that once you get into the FINRA world, everything gets very, very regulated. So everything you do has to be approved, whether it's advertising, whether every call you make has to be recorded. I mean, it is very regulatory. So if you're thinking of opening a portal and you think it's going to be a breeze, I want you to think again, because the portals are going to have FINRA doing audits on their portals. They're going to be looking at every single company. They're going to be looking at what due diligence you did when you signed them up. So you're going to, you know, just give that some thought. You're going to have to provide information to the SEC and investors. You're going to have to ensure investor education and tell them about the risk of investing in an early stage company. So how you're going to do that, SEC hasn't told us yet. I mean, are you going to offer a questionnaire and they have to actually answer it and take a quiz, or are you going to have an online learning portal and they have to complete a certain number of modules in your learning portal before they're educated? We haven't gotten the word on that. There will be a questionnaire that they do have to fill out that that affirms that they're aware of the risk of loss. And as a portal, you're collecting the money, but you have to make sure that no funds are actually released until the escrow is finished, until the offering is done. Also, as a portal, you're not allowed to solicit investments, so you're not allowed to act as a broker-dealer and encourage people to invest in a certain project. You can't offer any advice. Your employees can't be compensated on the success of a project offering. You're not allowed to hold or manage the funds, so you're not allowed to play with the funds. You're simply a conduit between the investors and the entrepreneurs. So now there are some disclosures that you as a company that wants to raise money through crowdfunding are going to have to provide. So if you're raising $100,000 or less, you have to have certified financials, which basically says, I'm the CEO or I'm the CFO, and I certify that what we're telling you is correct. So you're putting your name on the line for the financials that you provide to your prospective investors. If you go between $100,000 and $500,000 on your raise, you actually have to have reviewed financials, which isn't a full audit, but some outside independent person has to review your financials. So it could be your accountant. So if you have an accountant, off. If it's over $500,000, so anywhere between $500,000 and the maximum million limit, you have to provide audited financials. That's not cheap, and it's kind of a pain in the neck. So on the disclosures you have to provide to your investors, you have to show them what your cap structure is. You have to show them who the directors and officers of your company are, as well as all shareholders who own at least 20% of your company. You have to provide a business description. You have to tell the investors how you're going to use the proceeds. And you have to provide valuation and risk. So you have to tell them what the risks are, and you have to tell them how you came up with the valuation. How do you justify to me as an investor that your company is worth what you say it is? So getting to the good parts about crowdfunding, this is a brand new way to get money. I mean, if you think about it, you're going to be able to use the power of the internet to reach out to literally, potentially millions of people and tell them about your great project, and they can invest. Well, there are restrictions on how much they can invest, but they can invest in your project for as little as whatever you set the limit at. There's less upfront requirements, and it's at the opportunity as an investor to get in on a new issue, because if you're an investor with, say, your net worth is $750,000, you're still not an accredited investor, although most people would be considered not poor by any means, but they can't get in on a new issue. Now they can. Now obviously there are some cons to this. The annual reports to the SEC and your shareholders, that's going to take up some of your time. You're going to have to provide annual reports. The lack of institutional follow-on is pretty important. Now, I know some venture capital groups are actually creating whole new divisions where they're going to be looking at crowd-funded companies. There are other venture capitalists I've talked to that have said they're not going to touch crowdfunding companies with a 10-foot pole because they don't want to get near the diluted cap structure. What that means is, if I'm a venture capitalist, I'm looking at taking a position in a company and I'm going to give them several $1 million. I don't want to have to deal with a company that's got 2,000 to 3,000 unsophisticated shareholders, because I know that that's going to create a big problem. And that just goes right into the next point. If you're running a company with thousands of small investors, you're going to start getting phone calls constantly from these investors. Hey, what are you doing? What's going on? When am I going to see my money? When are we going public? And that's going to hamper your ability to run your company. So that's definitely something that you need to think about as a crowd-funded startup. So getting to the last slide, I'm ready to open it up for questions and answers. I know I run through this presentation pretty quickly, but I wanted to give you the broad strokes, and then we can get into details with any questions you have.
Okay, Jay, I have a couple questions in. Ben asked, I guess it's the dollar amounts or the limits you were talking about. He asked, were those dollar amounts total raise or per investor?
Those are total raise. So you can raise up to $1 million on your project, but you're only allowed to raise you're only allowed to raise $100,000 if you want certified financials. Up to $500,000 you need the independent review, and anywhere between $500,000 to $1 million, that's audited financials, and that's for the entire offering. Now, as an investor, if you have a net worth of under $100,000, you're allowed to invest, I believe, and I've forgotten the actual numbers, but I think it's like $2,000 and up to 5% of your net worth. And if you're over $100,000 but under accredited investor, I think you invest up to $5,000 or 10% of your net worth.
Great. Jeff wants to know, how do we protect confidential information? You know, do we sign NDAs or how do we protect that, Jay, when doing crowdfunding?
Well, that's one of the problems with crowdfunding is if you've got literally hundreds of thousands of people looking at your project, you're not going to get an NDA from hundreds of thousands of people. And so you need to be aware that unless you've already protected your intellectual property through patents and trade secrets and have got, you know, you don't want to open the kimono all the way. What you want to do is you have to give them a business description, but you don't have to give them the nuts and bolts details. So with a crowdfunding presentation, I would recommend keeping your business description very general, and if they don't want to invest based upon that business description, they don't invest. But if you get a guy who is actually an accredited investor and sees your offering on the internet and he wants to invest in another type of offering, say a Reg A or a Reg D offering on the side, then that's somebody that you may want to go into more detail with, sign an NDA. So being crowdfunded does not preclude you from looking at other types of offerings as well.
Oh, wow. Another David wants to, well, he says there are 2.4 billion internet users / investors in the world. What you described covers crowdfunding equity base. How can one take advantage of crowdfunding award base, kind of like the Pebble Watches did?
Well, if you don't want to do the equity funding, then I would recommend Kickstarter or Indiegogo as platforms that are actually operational today. And I'll tell you, I've got a couple of TriTech clients right now that were originally looking at raising money through angel funding, and their companies and their scale just don't really present themselves well for an angel investor, but they're a good idea, and they need money. So what I'm talking to them about is, let's not go after a equity investor. Let's go after somebody who would like this product and do a pre-sale with a discount, put it on Kickstarter, and obviously you're going to have to do a lot of marketing so that people are aware that it's on Kickstarter, and that's one of the problems that I've heard from a lot of Kickstarter users is that I post my project but nobody ever sees it, so to me it's a waste. But if you're a good marketer and you can use social media and you can spread the word about your product, and it is truly either revolutionary like the Pebble was, or has a good dedicated potential following, then you should be able to raise money in a pre-sale environment or something like that through Kickstarter or Indiegogo.
Great answer. David wants to know.
And it keeps the control of your company in your hands. You're not giving up any equity in the company, and that's always an important consideration. If you can raise the money without giving up equity in your company, all the better, in my opinion.
Jay, David wants to know, are you a Series 7 dealer or a Series 79 investment banker?
I'm a Series 79 investment banker. I'm affiliated. I'm with a broker-dealer in Texas, and I work as a registered representative.
Okay. I have a question from Paul. Who provides the due diligence for these offerings? Is it the portal? Is it the investor? Does this open up potential for new scams and fraud?
Oh, that's a great question, and that's one of the things that the SEC is really chewing on right now is how do we open up, it's kind of funny when you think about it because, for most offerings, whether public or private, you have to include a broker-dealer, a licensed person in the process, and they have to do a great level of due diligence. They have to report to FINRA. It's very heavily regulated. And now we're going to have an operation that's open to the public that anybody who has internet access can log in and take a look at projects and invest in them. And how do you protect that investing public from the frauds and the scamsters? Because one of the things is, there are people who have bought products on Kickstarter. For example, there was a company that said that they had some glasses that would actually take 3D video from the glass itself. So you walk around with this 3D video camera in your glasses, and they raised quite a bit of money. I think it was $700,000, and they've never developed anything. It's been over 2 years. And there are investors, or not investors, but buyers who have laid out money for these glasses, and they're not getting their money. So who's responsible? It is ultimately on the shoulders of the entrepreneur. They're the ones who are ultimately responsible. The portal is going to be responsible for a minimum amount of due diligence, but again, this is an issue that the SEC has to lay out and really define who's responsible for what. So one of the ways they're trying to get around that is by limiting the amount of money you can put in each company, so your exposure is pretty low. And the other thing is to provide those certified financials, or in the case of $500,000 or more, audited financials, so that people at least get a view of the financial picture of the company. And obviously, if you're going to go out and commit a fraud, you're probably going to try and get as much money as you can, so you're going to have an auditor sign off on financials, and if they're not correct, then that auditor's in trouble as well.
Jay, if a business doesn't want to do the equity funding option, for example, if they want to hold a pre-sale, are they still subject to the regulations?
Absolutely not. In a case like that, Kickstarter and Indiegogo have been going for years. That was all before the Jobs Act came about, and it's just like putting on eBay, really. So the only problems that you'll have if you're committing a fraud is the FTC will come after you.
I have another great question. How can you learn to prepare for a crowdfunding campaign? Jay, you have any suggestions?
Well, first of all, since the rules haven't been written by the SEC, I can't tell you how to prepare us exactly because we don't know what they're going to require. But the first thing to do is to make sure that your organization is solid fundamentally. And by that I mean make sure that an attorney has reviewed your incorporation documents or whatever kind of documents you have that set the company as a legal entity. Make sure that your cap structure has been reviewed by somebody who knows something about it, whether it's a consultant at TriTech or an attorney or an accountant. And obviously as a consultant we're not going to provide legal opinions, but we can give you an idea of this cap structure is bloated, you've got 100 million shares already issued to your family and friends, and your valuation's not going to work. It's got to make sense. And then the other part is, if you haven't been doing a good job of tracking all your expenses and and really keeping a good record of everything that's been going on in your company, you need to start yesterday, because all of that is going to be required for any type of fundraising, whether it's angel investors, venture capital, crowdfunding, you name it. So I would say the bottom line is, just as you would prepare for an angel investment or showing it to an venture capitalist, you need to have a strong business plan, a proven revenue model. Obviously with crowdfunding, you don't need the revenue model proven, because you can get a lot more story investors, people who invest in a great idea. So we go back to the days of the 90s when people would write a business plan on the back of a napkin and get somebody to throw them a couple $1,000,000 bucks. We're almost back to that, where you can come up with a great idea. You may not have everything done. You may not be ready to go, but all you need is a couple $100,000 to get your first prototype into the market and prove it. That's where crowdfunding may help you a lot, but then you run into some of the cons like we explained before.
Okay. J. Rob from the audience says he thought he heard you say portals won't be open until next year, but he's asking, isn't Kickstarter a portal?
Kickstarter is not a crowdfunding portal as far as equity goes. Now, believe me, will Kickstarter be one of the first equity crowdfunding portals? I think you can almost count on it. But you can't go on Kickstarter or Indiegogo or Jelly Belly or whatever these other ones are and actually post a stock offering on the internet. And that's what the crowdfunding is all about. You can pre-sell today.
Great. Jay, Paul Roberts from OC Talk Radio, which is a community radio station in Orange County, says he's done a number of interviews with crowdfunding experts, and he wants to know if you are interested in sharing your expertise on one of their shows, and if so, how could he contact you?
Sure. I think we have a contact information slide up. Goth at Redtail Capital is my email, and my phone number is there, so feel free to give me a call.
Great. Great. Jay, other than micro ventures, do you have any recommendations for other good platforms to reach out to accredited investors?
Honestly, there is another one, and that's called equitynet.com. I'm a big proponent of this website because I've used it myself. I've bought a couple of packages on it. I like it. And what they are is they're actually a business plan software company that's cloud-based. So you can go in, you can get a premium package, which allows you to put your business plan into their system. But they actually, if you don't have a business plan yet, they'll help you write a business plan through a question and answer style format that I really like. So if you've ever been in a business planning software, they have all these things that you really don't know the answers to. Well, with this one, you just answer the questions you can, and then they'll actually evaluate your business plan, tell you what your strengths and weaknesses are, tell you how you stack up against others, allow you to really get your business plan finalized, and then you can put your business plan on their portal where they have literally thousands of angel investors looking at deals, and they claim to have funded over $100 million in startup capital through their platform. So that's equitynet.com. And if you sign up for their stuff, tell them I sent you, and that'll make them feel better.
Great.
Make me feel better. I don't get paid, but I like the attention.
Will your company, Redtail Capital, be involved with any crowdfunding platform?
No. I just want to make it clear, as an investment banker, I only work with later stage companies. I don't work with startups. I work with startups as an SBDC consultant and help them and advise them. But I do not get involved in investment banking with early stage companies. I work only with institutional buyers, and these are the big boys. So it's a whole different world.
Great. Jay, Jeff wants to know, he says, our company offers software for workforce analytics and planning. Our target market is HR, finance, IT, and medium to large businesses. What advice can you offer us for leveraging crowdfunding, as our business does not target individual consumers like most examples you shared?
Well, crowdfunding is going to open this up to investors who are interested in actually, investing in companies like yours. If you're a software platform that allows people to do something better and they think people will buy it and that you can make money selling it, they would be interested in investing in it. It doesn't need to be, see, Kickstarter is a pre-sale to a consumer, so they need that consumer connection to get it going. I don't think you do well on Kickstarter, although I could be wrong. But I think for somebody like you, if you only need, and this is the key, if you need $1 million and that's it for the rest of your life, crowdfunding may be a good solution. But if you're thinking I need $1 million now and then I'm going to go after 10 million later or 5 million later, crowdfunding could pose more headaches for you than it would solve. It might be better to go the traditional angel investing route, or I've talked to Marquise about it, and we'll probably be doing another webinar on Regulation A offerings, and that's going to open up a whole new world of investors to entrepreneurs that I think is going to be probably just as, or even maybe more exciting than crowdfunding.
Mike Stockwell has another question around EquityNet. He says EquityNet.com, posting your complete business plan. Is an accredited investor actually going to read it from that site?
They do. If they're interested. I mean, I as an investment banker and an active investor, I get what they do is they figure out, as an investor, you tell EquityNet the kind of offerings you're interested in. So while there are people posting new offerings up there every day, I get notices of only about 2 or 3 a month that fit the investing criteria I have as an investor that I might be interested in actually looking at. So I'm not going to read hundreds of thousands of business plans, but if I see something that catches my eye, I'll do what every investor does. I'll look at their executive summary, and if there's something in there that really makes me think they got a shot, then I might go into their business plan. And believe me, I do my due diligence. Some guys will just throw money at anything. I'm not one of those people, but the investing public is very diverse.
Great. Jay, is there a comprehensive list of crowdfunding sites in any way to rate them, or that could tell which ones are the best or have the best results?
Well, we don't even have any crowdfunding sites up yet, so that's a little premature. I think just like everything else, like Yelp and all these other review companies, you will see that happen very, very quickly as this develops. People will start putting out through social media, hey, I had a terrible experience with this company, or I had a great experience with that company, and then somebody is going to go out there and aggregate those, and maybe you just found a good idea to post on a crowdfunding site.
Wow. And for the audience, an audience member, David, shared with us a list of 450 crowdfunding resources, so I'll just email that all to the audience. I have another question from Scott. He wants an investor who can provide him with the network to help grow. So it sounds to him that crowdfunding is for people who just need money. What's your thoughts on that?
I agree. I think if you're looking for an investor who's going to provide more than money, you need to go to angel events and possibly early stage venture capital, where you get access to a Rolodex and you get the mentorship. So, your first step should be signing up for consulting with TriTech SBDC.
Which I agree with. We have a question. Will you guys be getting the slides? What I'll do is at the end of the webinar, I'll recorded this webinar. I'll send out a link to everybody who attended so you guys can go through and view it again. But I encourage you, if you have any questions, please call in. We have 7 or 8 counselors who are professionals. A lot of them have investment and investor backgrounds, and so they'll be willing and able to answer tons of questions for you. Along with everything I'll send to you guys, I'll send some contact information for TriTech. Our services are totally free, so you could ask a million questions if you like. You see, I have another question. Since a business can't post stock offerings on the internet at this point, should we just check periodically on the SEC website to get updates?
What I would do is set a Google alert, and if you're not familiar with that, you just go to Google and type in Google Alert, and it'll take you to a web page where you can sign up for alerts on different topics. I use it all the time for various things that I follow, and just type in crowdfunding for an alert, and then once a week, if you set your frequency to once a week you'll actually get a alert that tells you what's going on with crowdfunding, and I find that to be a very useful resource.
Okay. Any additional questions that you have for Jay, anyone? I'll just give him 1 second, Jay, to see if anybody else has something. Someone wants to know, do you use, I guess it's Google Trends or google.com/trends, Jay?
No.
You don't? Yeah, I never heard of it either myself.
Probably look into it, though.
Definitely look into it. So if that's it, thank you guys for attending. This will happen once a month, every month. You're all on the list now. I'll definitely send you guys some more information. So if you want to attend the follow-up webinar, that'll probably be in the next 4 to 6 weeks. We have one more question, Jay. Do you have a referral to an accountant that you would suggest working with?
Yeah, we work with a number of different accountants, and what I would recommend is contact me personally, and I'll find out what business you're in, and then I can match you up with an accountant that works, or contact TriTech, and you know, we all have our resources, so we have people who specialize in certain areas, so depending on what business you're in, we'll be happy to make that recommendation.
Yes, and for more information about TriTech, just visit our website. That's TriTech S, B as in boy, D as in David, C. So TriTech SBDC.com. It'll have our contact information there. We're the resource. We have not only accounting connections, you know, attorney connections, and the list just goes on.
Yeah, there are a lot of great service providers out there, and since we work with them on a regular basis, we really know who does what, and we can steer you in the right direction.
Definitely. Richard asked, will this webinar be archived for replay? Yes, Richard. I'm currently recording this webinar, and I'll send it out to a link to all you guys so you could access it. So if we don't have any more, guys, thanks for joining this webinar. I'm glad you joined us right before your Labor Day weekend to get some information. Just know Jay and TriTech are great resources for you. If you ever have any questions, feel free to contact us anytime, and we'll do our best.
Thanks, everybody. Have a great Labor Day weekend.